Johan, thank you very much. Very great to be here again. This is probably my third or fourth time at the German Resource Night. Of course, this is the 11th annual Resource Night, and it's a very exciting time. So, 24 years ago, most of us were younger and more beautiful. Some more beautiful than others, but still nonetheless fantastically beautiful. 24 years ago, the price of gold was roughly $250 to $300. Today, as we've seen, the price of gold is much more beautiful at $2,350 an ounce. Now, gold is the only reserve currency that has no government intervention, and you cannot print more gold like you can fiat currencies. Now, knowing this and seeing what is currently happening around the world, one, significant devaluation of fiat currency. Two, the unlikelihood of unpayable government debts. Additional and more significant quantitative easing. And yet no indication of any change in behavior. So, folks, by way of hands, who believes it might be a good idea to have some gold in your portfolio? Very good. Very good. Now, two, who believes, based on that information and what we've seen historically, who believes that gold may go up in value over time? Okay, fantastic. Well, Calibre Mining is a gold producer. A fantastic opportunity to get some additional gold exposure in your portfolio. Now, I would recommend always consulting a financial advisor and doing your own due diligence. But as Johan said, Calibre Mining is a growing gold producer. We are focused on share price performance and accretive metrics on a per-share basis. As you can imagine, of course, I will be making some forward-looking statements. I'm sure you'd all be shocked if I didn't. So please do take the time to read the information. This is also available on our website. I don't anticipate you will read this in time. I'll quickly move on. So, in 2019, Calibre transitioned from a junior explorer developer to a gold producer. We went out and acquired gold production. And at the time, we were anticipating to produce between 50 and 70,000 ounces of gold a year. So organically as well as inorganically, but mostly organically, Calibre has grown approximately 28 to 30% of annual production growth year over year since 2019. Our guidance this year is 275,000 to 300,000 ounces of gold. You can see here, and some of these acronyms you may not know, but total cash costs or all-in sustaining costs to produce an ounce of gold will range from $1,275 to $1,375. Meaning, today, Calibre is making a margin of almost $1,000 an ounce on all of our gold that we're selling. We are continually investing in our assets, so we continue to invest in development as well as exploration. So from my perspective, I'm a shareholder, one of the founders of the company, but from my perspective, one of the largest value adds is not only delivering what you say you're going to do, as is our track record stated, 17 quarters of delivery of production, we've met or beaten expectations, but is also to reinvest in our assets. That's highly, highly critical because as you all, I'm sure, know, you're mining your asset, and it has a finite life. It may run out. It will run out at some point in time unless you acquire new assets or you invest in exploration and are successful. Investing in exploration through operating cash flow, reinvesting back into the assets, and if successful, discovering new zones can have a very positive impact on share price performance. It can extend mine life. You can discover new higher grade zones. This is some of the stuff that Calibre has done just in the last 4 years. What's very exciting, as Johan mentioned, is that Calibre recently has acquired a top tier 1 asset in Canada. Now, Canada would be known by some, not all, but most institutional investors as a tier 1 or a top tier jurisdiction. The asset that we acquired has 5 million ounces of gold in all resource categories. This is a large system. It's got 2.7 million ounces of what we call reserves. Reserves would be the highest category of data within a deposit. So the drill holes are very tightly spaced, and the engineers have done a lot of analysis to ensure that you can extract gold for economic values. We acquired that, and we closed the deal in January. This company was in need of additional financing. We were able to provide that because we had a fantastic platform. As you can see here, 275 to 300,000 ounces a year. We had grown production. We had grown cash. We were in a position to be able to invest and diversify our portfolio. We did that by the acquisition of the Valentine Gold Mine in Newfoundland, Canada. So what this does for us is it puts us in a fantastic position in order to grow our business again. This asset, by the first half of 2025, so less than 12 months away, will be producing in excess of 200,000 ounces of gold based on a 2022 economic study at around $1,000 an ounce. So that helps our margins across the board. The company would then be producing 400 to 500,000 ounces of production, and it should lower our overall consolidated all-in sustaining costs, benefiting the business. In addition to that, as mentioned, we operate in Central America as well as Nevada. Most of our net asset value is in Central America. For some, they'll trade at a higher discount because of the jurisdiction that we operate in, even though we've delivered, as I've said, quarter over quarter and never missed. But by doing this transaction, we completely diversify our portfolio. Now, 60% of our net asset value is going to be out of North America, Canada, and Nevada. This should re-rate the company as well. So going from a junior gold producer, trades at one type of multiple, a lower multiple, to a mid-tier gold producer will increase our multiple. So we have to deliver the asset, but in addition to that, the larger scale and diversification will increase the value of the company. But, of course, we have to deliver the mine. So it is anticipated that this mine is now 62% through construction. So it's well on its way. All of the major critical items are at the site. Construction is ongoing now. And we would anticipate by this time next year starting to produce and pour gold at the site. So if all goes well, we think there's a credible opportunity. The track record of this team is quite well known in the gold mining space. We've created over $5 billion of wealth for our shareholders. Our lead director has sold over 6 gold mining companies. The last one was called New Market Gold, and I think last year, if you were here, I mentioned that one because the team discovered one of the highest grade underground gold mines in the world in Australia, and then merged the company to create a 500,000 ounce a year gold producer in Canada and Australia, and that company went on to be a $70 billion company. Tremendous track record of shareholder wealth. What I'm most excited about is not only delivering this new mine, but it's the exploration potential at this new asset in Canada as well. Multiple kilometers of strike potential to find more gold, which again, if we do, should have a very positive impact on share price performance. This year, although we're not doing too much drilling in Newfoundland, we are doing 130,000 meters. That's a significant drill program mostly across Nicaragua, Nevada, and then some in Newfoundland. So we continuously update the market on this type of news. So when we look at Calibre today, again, we just acquired this asset, so we're going through a transformation. Our market capitalization today, you can see there is roughly around US $1 billion. And you can look at a number of our peers there that are in the mid-tier category. anywhere from 400,000 to 500,000 ounces of gold a year. El Dorado, $3 billion market capitalization, and I think that's even up from this chart. Alamos Gold, they operate in Turkey, in Mexico, in Canada. They're a $6 billion company. So there's tremendous opportunity as Calibre continues to deliver, and as Calibre continues to bring on this new asset, we should see a good re-rating. You can see a number of metrics there. One of the most eye-popping metric here is the 70% growth rate we see over the next 12 to 18 months. So now here we are with a diversified portfolio. We've got 2 operating mills and a number of operating mines in Nicaragua. We've got an operating mine called Pan in Nevada. We've got a 2 million ounce gold resource in the state of Washington, United States. Then, of course, we've got the 62% complete Valentine Gold Mine. Some of the metrics there, you can see the operating cash flow from the company last year was over $200 million. Where we're going, you can see that significantly increase, and I believe that was done at about a $2,100 per ounce gold price. So significant additional leverage as the price of gold moves. We talked a little bit about this, but one of the highlights out of this chart is the addition of 5 million ounces in Canada. Now, recently a transaction happened with another company in our peer group called Equinox Gold. They bought back half of their deposit. It's a 300,000 ounce a year deposit. They bought half of it back, I think 40% of it back, for $1.1 billion, and it was going to produce 130,000 ounces of gold. That's our current market cap today. So there's a tremendous opportunity of actionable transactions that are happening now, which could lead to Calibre being valued at much higher than it is today. I talked briefly about this track record, but just to highlight, in 2020, Calibre was anticipated to produce 50 to 70,000 ounces that year. We changed the way we operate the business in Nicaragua. We now operate what we call a hub and spoke approach. So there's 2 large mills separated by about 250 kilometers. One of those larger mills was going into closure. Our CEO that's got 30 years plus of operating experience, and he was one of the senior executives at Newmont, decided that it was a good idea to haul material from one mine to the other instead of building new infrastructure, utilizing that infrastructure. So in the first year, we were able to produce 136,000 ounces of gold. We added a second satellite the following year, and we produced 182,000 ounces of gold, all through operating cash flow and adding another satellite deposit to the operation. 2021, in 2022, we added our Nevada asset, 40 to 50,000 ounces a year. But then in 2023, a record year for us, 283,000 ounces of gold. The increase was because of another organic satellite deposit in Central America that led to that production growth. So we've gone from $4 million in cash in 2019 to $86 million in cash at the end of last year. We've got a tremendous track record of increasing gold production. But also, in 2019, we started with a very, very low reserve base. Again, that's the highest category. The reserve base was 250,000 ounces. After producing over 700,000 ounces of gold, we're now at 1.1 million ounces of reserves. So we've continuously found new areas and increased the size of that resource. This is how we operate. The 2 mills are located here and here, and we've brought in these different satellites into the operation. We still have 1 million tons of surplus capacity, so we can see additional production growth. I'm not going to go into this slide too much. It does look like my 7-year-old daughter painted this, but this is what's a geophysical map, and it outlines fantastic new targets for gold mineralization in areas that we've discovered and shows tremendous potential to find more gold, and that's why we're drilling so much this year. The increase in organic growth potential. So if we were to use half of the additional processing capacity that we have available to us, we could see another 50,000 ounces of gold production. So there's tremendous upside from installed processing capacity. I talked a little bit about Nevada. It's a smaller asset for us, but a very large land package. 220 square kilometer land package in one of the top geological and mining jurisdictions in the world. It's very well known for discovering high-grade, large deposits, and we're continuing to explore there. We've been successful increasing our reserves over 50%, and now, over the last 2 years, we've produced over 80,000 ounces there. Coming to the Valentine Gold Mine, we're very excited about this opportunity, as I'm sure you can tell. But again, this asset for us will produce almost 200,000 ounces a year at roughly $1,000 all-in sustaining costs. We're 62% through construction. You can see a big mill here is almost complete. Power is connected to the site and fully electrified. All of the critical elements, the SAG mills and ball mills, are all on site for construction. And again, by the end of this year, we anticipate being in production, leading to that 400,000 to 500,000 ounces a year of production. I just want to finalize and leave the note of the exploration potential at Valentine. This is truly, I believe, a world-class asset that has potential to double or triple in size of resources. So already, in one of the open pits, the team has discovered a new high-grade zone. We've drilled 46 grams per ton gold over 5 meters, so that's very good grade right at surface. We're now following that up with a drill program along that, what we call a shear zone. This is a dotted line here. This is a big fault that has broken a piece of the earth, and it allows for fluids to come up and host gold. That's where the 5 million ounces have been discovered. This is the size of the overall land package. So what I just showed you was this small little open pit here. From this pit to this pit is 6 kilometers of what is known as this long, big dotted line is a fault. So we've got over 30 kilometers of strike length. We've got another fault on the north side that's never been tested before. So there's incredible exploration upside, and we'll be drilling this year and next year at an aggressive rate. Very exciting potential for the company. Our lead director, a geologist, who's found, discovered, and sold many companies. He went out at site and he was looking at the exploration potential, and while he was looking at the different rocks along the trend, he found visible gold at a number of different outlets, different areas. So that demonstrates to us there's good exploration potential. This pit in the middle here, we call the Berry Pit, was only discovered in 2020. So that's telling us that this is still very early days in terms of its evolution and discovery potential. So Calibre is growing from a junior to a mid-tier gold producer. Should see a significant re-rating from that, particularly on the development and positive execution of delivering the Valentine Gold Mine this time next year. So with that, ladies and gentlemen, I thank you for your time, and you're all here for another reason. Hey?